Welcome to Sachs Realty's Tuesday Night Podcast, where we talk about anything and everything real estate. Each week, we deliver expert information enabling you to make better informed decisions while keeping more money in your pocket. If you're interested in real estate, this is your show. All right, guys, thanks for joining us tonight. We are going to talk about what is happening with all of our inventory. So it's all over the news. Everybody's talking about, no inventory, lack of inventory.
Lack of inventory.
Guys, you would be surprised when we tell you tonight that Wall Street's been the major house buyer competing with American home buyers. And we're going to kind of uncover it. So what does that mean? So investors have been buying houses and alarming rates. Most of what they're buying are single family homes. And guys, thanks for joining us this evening. I'm Todd Sachs. I'm the real estate broker here at Sachs Realty. Melissa?
Hi, everyone. I'm Todd's assistant, Melissa Levy, and welcome to another Tuesday Night Podcast. And Todd, that is correct. Investors are accounting for up to 32% of home sales in the United States. And according to a recent updated Redfin report dated the beginning of April, the report shows that investors have the biggest market share in Atlanta, Charlotte, and Jacksonville, Florida.
Yeah, I think Atlanta was 32.7% in the fourth quarter. 32.7% of the buyers were investor buyers. It's huge.
Huge. Yep.
And then really nationwide, 1 in 5 single family houses in the fourth quarter of last year accounted to, went to investors. So 1 in 5 or 18% of our single family houses went to investors. And tonight we're going to dive into who these investors are so that you'll better understand because there's so much, yes, inventory, is short for many reasons, not just because investor buyers, but really because of that combined with the supply chain bottlenecks that we've had, the labor issue that we've had on builders being able to get product to the market, getting it finished. So overall, though, to kind of put this into some type of understandable quantification, about 80,000 homes were purchased by investors in the fourth quarter of 21, and that has totaled more than $50 billion in value. So what happens when investors are competing for the inventory? We've seen it. The available, what's left. And by the way, most of the inventory that they're buying is the entry and medium level housing. So not really so much of the really expensive inventory that are move up buyers and things like that, but more of the entry level. So a lot of our first time buyers, a lot of our millennials, the largest buyer out there right now by 30% of the buyers that are buying non-institutional buyers are millennials. So these are the properties the investors are buying that are directly competing with those entry and medium level houses. So after tonight's show, you're going to have a little better understanding of why we've experienced the shortage that we have, and which has created a lot of the multiple offer situations and the buyers paying, in many cases, over list and over appraised value.
The investors are really limiting the amount of available homes for buyers. Some buyers are using all of their cash. They're paying over appraised value with their cash. They're foregoing home inspections, appraisal contingencies as well. So it's something to be noted on how many investors there are in the market.
Yeah, and Melissa, just so everybody understands what the food chain really is in the home buying world.
Yeah.
You have flippers, I guess, that work with the distressed properties or the outdated properties. They've been knocked out of this market altogether because they have to pay the least amount.
Yeah.
Right. And then you have the investor buyer. And usually the investor is buying more for a long-term hold strategy, a rental strategy, so they actually can pay more money than the flipper. And then thirdly, the one that ultimately pays the most is the one that will live in the home and make it their primary residence. So they actually have to outbid the investors. So kind of putting that into perspective of where we're getting to here this evening. So guys, tonight's information is based on what we are researching and finding out online. Not only that, but what I personally experienced as a real estate broker and what I have experienced serving the residential real estate market in one way or another for more than 32 years. And just so you know, as a real estate broker, any licensed agent as well, part of what we're commissioned to do in holding our license is not only know what's going on a local level, but a national level.
We're going to talk tonight about who are these investor buyers and why are they buying up as many homes as they can. And also, Todd and I are going to talk about, do we think their strategies are going to work?
Yeah. Will they work or will they go bust, right? And so lots to unpack here tonight.
No, yeah.
Yeah. So who are these investors? Besides mom and pop investors, landlords that, we've been accustomed to forever, after the 2008 crisis, real estate investment trusts or REITs, which basically are companies that buy real estate to make a profit. Some of them manage them, some of them turn them over to management companies to manage for them, but also private equity firms, insurance companies, pension funds. They've also joined the home buying party. So basically, in 2010, in the height of the foreclosure crisis, the federal government decided that it was probably time to step in as they watched literally hundreds of thousands of homeowners go into foreclosure. And the feds thought, without stepping in, that it would just really get way worse than it did and that the home prices would continue to tumble. And so what they did is they incentivized Wall Street, these companies that I talked about, pension funds, they incentivized them to step in. So in 2012, the federal government launched this pilot program that would allow investors, or Wall Street, the companies that we just mentioned, to basically buy these foreclosed properties by the hundreds, and really hoping that these new owners would then rent them out, creating more housing or better housing than our already cash-strapped mom and pops. So the program worked from 2011 to 2017. Some of the world's largest private equity groups, hedge funds, and other large investors spent about $36 billion buying over 200,000 homes. So investors, these large investors, argued that they could be better landlords than the already cash-strapped mom and pops.
Yeah, this has been very profitable for the Wall Street companies. And especially now with the raising prices in homes, raising rents, why would they want to stop? I believe greed has come in and played a factor here. Especially something else to think of is that money, the cost of money with the low interest rates has been incredibly affordable.
Yeah, it's been cheap.
Very cheap.
So it is allowed, and you're right. I mean, it's greed. So, we're letting Wall Street buy up these properties by introducing it, by the federal government to these companies, pretty much gave them a free ride.
It really did.
Saying, hey, look, we'll sell you these 200,000 homes at, less than what was owed. So they really got a chance to capitalize on the values. And then what we've seen since then has been an amazing appreciation of those houses. And of course, what are they thinking? They're thinking, hey, this is great. It's going to continue. So let's gobble up as much as we can.
Absolutely.
So, it kind of goes without saying on why they're doing the buying now, right? Mm-hmm. So for the most part, these investors believe that real estate, and it has over the long haul through the years since we've been tracking it here at Sachs Realty in the mid 60s, we were looking at charts that, house prices certainly gain with appreciation. And basically Wall Street, they're smart. They look at it as, through time, as inflation happens, and that's why the prices of real estate go up, but the dollar's actually devalued.
Yes.
So they'll take this cash that is basically, plenty of in the marketplace, especially recently, since we've seen so much cash by the stock market doing well and the housing market doing well and the government handing out all this cash.
Oh, I know.
So basically to pay the rent, right? So Wall Street's thinking, hey, this is great. So it's a hedge against inflation. And basically as our inflation rises, and we've seen the largest inflation than we have in 40 years, the dollar goes down. So for example, if you have $10 in your pocket and you can go out and buy, 2 loaves of bread and 2 gallons of milk, if now you go out to the store, inflation's going up and you can only get 1 loaf of bread and 1 gallon of milk, your $10 has been devalued because of inflation.
Exactly.
So that's basically what's been happening. And if you just think about it this way, if they're competing and they're buying up all the affordable housing, which our entry level buyers would otherwise buy, and the government actually has their control on what's being built,
Right.
because a builder just can't say, well, let's go and tear this forest out and, build houses. So the government has a lot of red tape for that to happen. And there is pros and cons to it, but we need housing, right?
Yep.
But what happens is the government's directly controlling the new builds, and the amount of expense, how costly it becomes for developers to develop the land because of the red tape, because of the government controls. It makes it impossible for the builder to build an affordable house because they want to build a product that they can make more profit for the out-of-pocket cost that they put out there in the first place. So, there you have it. So Wall Street's figuring, you know what, guys? I know what they're probably figuring is they're saying, hey, people must live somewhere. And if they can't afford to buy the houses and we own all the rentals, well, then we can control the rental market.
It appears that they're just trying to corner the market.
100%. Like I said, people need to live somewhere, right?
Yeah.
So they're either going to rent,
Right.
they're going to buy something,
Or live with family members.
yeah, they're going to move back home.
Yep.
And the other thing is, institutional money is really focused on giving their shareholders the most return, profits, right? For the shareholders, which makes sense. I get it for them. But as I've seen, they also seem to get the biggest breaks too. And I see the real issue being that small business, and that's really what this is coming down to. We need more of it in America. And when I'm talking about the mom and pop landlords in this case, mom and pop landlords are going to be the most friendly, I think.
Yeah.
They're going to be the most understanding to our tenant population. They're going to get it more on a local level. I've had tenants in properties for 10 years and I've never raised the rent. And, as a business owner, or somebody wanting to get into the rental business, you may think that that's not a great strategy. Hey, look, you've had people in your houses that you've never raised the rent in 10 years, but understand my mortgage never goes up. So I've got a pretty solid rate. I'm still profiting every single month, but I don't need to worry. When I have good tenants in place, I'm not wanting to push them out. So, I try and make a fair rent. I do make a profit. But I don't have to worry about these tenants either destroying my place. They're actually treating it like it's their own home. And there's certainly something to say about that. But the other thing is, traditionally, as being a landlord, one day the property is going to be paid off. And, I gain the appreciation of that too. So let's not forget that. So the same appreciation that Wall Street's looking for, I gain it too. But to me, having the small mom and pop or a small business approach to landlording, I think it kind of gives the best to everyone involved.
I will say I have rented in the past, and I know how important it was to have a great relationship with my landlord and how timely repairs were done, the communication. So it's sometimes, not all the time, but it can be a little different if you have a property manager who you have to go to. So I have seen both sides of it, and I much rather choose a personal relationship to have with a landlord.
Yeah, I can tell you, when I was looking online at the amount of institutional buyers that there are and who they are, and you can research them yourself. But a lot of these Wall Street companies have really bad reputations.
Yeah.
The internet is really just a whole bunch of reviews that basically say that people have been waiting for things to get fixed.
How can you keep track of everything? It's just the volume is so big.
Yeah. And I think, and that's the big thing too with, we were talking about, will it work? Is this model going to work? And we'll kind of address what has happened in Germany, because we're not the only country where institutional buyers have been buying up our, affordable housing and record rates. But the biggest issue is I think that when the government says that they're here to help, they kind of see things, and I get it. I mean, we need some kind of control systems in place. I do understand that. I'm not saying that government is bad, but I think a lot of times what happens is government says that they're here to help, and they actually, their intentions may be great, but a lot of times they create problems in other areas, or the programs that they develop, really kind of take on the life of their own. And, what my experience in the last 32 years of being self-employed is that big business is not good for people in general.
Yeah, I agree with you on that.
And I think, throughout history, what happens is big business, they get so focused on returning profits to their shareholders that they forget about the people that they intended to create the business for, right? The consumers.
Yeah.
And that's what we're looking at here.
Yep.
So, kind of diving into whether I think that this model is going to work, the bigger issue that we have is that big business, they need to give such high returns to their investors, or if they don't, the investors will start to back out. But what this means is that they have to get on the aggressive track to return these high investments by raising rents. So they have to get on that track of every year pushing rents forward. And a lot of times, they believe that they'll go in and that they'll make improvements that will make the house worth more money monthly, which in a lot of cases is true. But what they have to realize, and I think, and there's a saying in business, that when you get out of your game and get into someone else's game, you become fair game. And what I think is that they don't realize that landlording is a very difficult business. Yeah. And I've done it for over 20 years.
Yeah, I think it's underestimated for sure.
Yeah, houses require a lot of work. Even when the tenants treat the houses like it's their own, things break, right? So they could treat the house with love, but things wear out. The heating and air systems go bad. The roofs wear out and need to be replaced. Just think about proper home maintenance alone. It can cost a fortune and really eat up the landlord's everyday profits.
Yeah, and these things cannot be neglected. I mean, they have to be addressed and repaired in a timely manner.
So, Melissa, one of the things that I want to kind of address is that the housing crisis isn't only happening in the U.S. So it's happening in many countries around the globe. And I'd mentioned Germany, but in Berlin, Germany, last fall, the people were asked to vote on a referendum to approve the expropriation of property from some of Germany's largest residential property firms, companies that, sort of like these Wall Street firms that we're talking about, that own more than 3,000 properties apiece. And basically, expropriation means that when the government comes in and actually takes back or takes the properties or forces the firms to actually sell or liquidate these properties. And basically, it won by a vote of 57%. And, though the referendum is not legally binding, meaning that, the Senate hasn't voted to, actually do it, take these properties back. But what it means is that the lack of affordable housing, it now makes it more of a political issue that is hard to ignore. So, basically think about the politicians. They're going to be addressing this as reasons to get elected.
Yeah.
Do I think that same thing will happen in the United States? I mean, who knows, right? But I think that people are going to say no. I think that people are going to start standing up against these Wall Street landlords. And we have a lot of evidence through the history of our country where when Wall Street gets involved, even corporate America, they really make colossal mistakes too. I mean, I can think of a handful of companies that I grew up with that went public that aren't around any longer. And as I'd said, I think that they forget the people that they serve.
Yeah, I agree with you. What do you mean about them forgetting about the people that they serve?
Well, I mean, the companies you're talking about.
Yeah,
so
yeah,
these
the
large
companies.
companies.
Yes.
I mean, history, has shown. I mean, we'll just take a company like Sears, for example. They didn't innovate. They weren't keeping up with the times. They weren't keeping up with the demands of the population, and they became irrelevant.
Yeah.
And I think, whether it's a matter of that or just outpacing or pricing or not caring about the clients that they serve, we're not stupid. We know when we're not being treated properly. I mean, I could think about, guys, I could think about our internet provider. I wish that somebody new would come on just so I could cancel them, right? So what I'm talking about is as these companies get so big, they think that we don't have a choice but to use them.
Yeah.
And in fact, it opens up a door to prove different, right? It gives us the ability to be resilient. And guys, I think the most important thing is that we need to trump our small businesses.
Yeah.
We forget that these are some of the best employers that we have. And we've found out through the history of time, when these big companies gobble up everything and monopolize the situation, they actually are the least paying in our ecosystem. Small businesses, they're the ones that are driving the employment market. And just kind of prove my point there. And I know it's a bit off topic, but when a Wall Street company doesn't see what they want on the balance sheet or on their profits and losses, they see more losses than profits, they just go in and slash, right? They just get rid of employees like they're just completely dispensable, right?
Yeah.
They'll shut locations down that aren't serving well. As a small business, the small business owner will actually take their own paycheck, throw it in a drawer to when it can be cashed, if ever, and let everybody else cash their checks. And I think that's the big difference here. What we're seeing with the lack of affordability in housing, we're seeing Wall Street push, big business push, small businesses, mom and pops getting pushed out. We're not putting our emphasis on them, making it, affordable for you and me to get more in the residential housing market with some of this inventory. And we're selling ourselves out.
Yeah, we are. It all goes back to the profit and the greed.
I think at one point the people are going to figure it out. And we get a lot of comments. I wish I had a crystal ball. I wish I knew, guys. I wish I could tell you exactly the way it was going to be. But I'm sitting on the sidelines just like you. I think the difference for a lot of people out there that may be listening is I've just been in business for 32 years. So I've seen more of this than some. And then certainly there are people out there that have seen way more than me. But I think, Americans are resilient.
Yes.
I do. I think that we'll say no eventually to Wall Street landlords. I think we'll see it. And I think as profits wane, I think as these corporate landlords figure out that landlording's not easy, and they start to see profits wane, let's say that people can't pay their bills and then the government doesn't bail them out with more stimulus this time, right? And they start to see, and to that point, I think a lot of the Wall Street companies saw like a 97% rent coming through the pandemic. So 90% of their rents were paid.
Yeah.
And I think that there was a lot of the stimulus that was happening.
I would think so, yes.
So, if the government doesn't bail them out, right, again, what will happen? I think they'll start to lose profits as some of these systems need repairs again. Maybe they're coming off of 7 or 10 years now of great profits when the houses were initially renovated because they bought them for pennies on a dollar. I think what happened is, now these systems are going to need to be replaced. It's going to eat into their profits. If they don't deliver the sometimes double-digit returns that they've promised these investors or that they've shown them before, investors will start to back out, and then hopefully Wall Street's going to, become ineffective at this game and start selling these properties back to the mom and pops and to the people that should be buying them in the first place, and that's homeownership.
Todd, with what you're saying about, being so resilient and things changing, look at COVID. Look at how much us as a human race went with the flow of everything and resilient and bounced back, and look where we are now. So I think there's a lot to be said for that.
Yeah, and there were in history of time, we didn't always have the kind of wealth that we have now where everybody owned homes. We had more generational housing.
Yeah.
Right. So we had where maybe sometimes there were even 3 generations living in the house, which would have been the grandparents, the kids, and then the grandkids. right? So we may just get back to seeing that some more.
And aging in housing is a very current topic. I see it a lot. I see where, there's organizations making that be a real thing and part of our culture. So yes.
Yep. Now, I do want to make a point, guys. I don't want you to think that I'm against businesses buying rental properties. I'm all about mom and pop landlords and small businesses buying properties on a local level and really giving a great service to our rental community, our tenants. But I am against Wall Street. I don't think it's their place that they should be buying and competing with our home buyers for the American dream and really driving a wedge from what is affordable in both home ownership and also in tenantship, renting. I don't think that they should be driving the wedge of affordability into the marketplace. It should be something that they should stay out of.
Mm-hmm. Well said, Todd. Thank you, everyone, for your comments and questions. Keep them coming. We really, really appreciate it.
All right, guys, that wraps it up tonight. Thanks for watching. If you like this video, go ahead and give it a thumbs up. It'll let Melissa and I know that you do. And if you haven't already subscribed and you want to get more content from us, hit that subscribe button. Make sure you hit the alert bell so you're alerted every time we upload. We appreciate you. See you next time.
See you next time.
Sachs Realty, Maryland broker number 607720, office number 443-318-4514, equal housing opportunity.